welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 10th, 2024, and we're diving into Ferguson's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ferguson, a leading distributor in the North American construction market, has just released their Q1 2025 results. Let's break down the numbers and see how they performed.
Revenue and profitability overview. Let's start with the top line. Ferguson reported net sales of $7.8 billion, which is a 0.8% increase from last year. John, can you elaborate on the factors driving this growth?
Absolutely. The growth was primarily driven by a 3% increase in sales volume, although this was partially offset by a 2% deflation in prices. The gross margin slightly decreased to 30.1%, down by 10 basis points from the previous year, indicating some pressure on pricing.
And what about their profitability?
Ferguson's adjusted operating margin came in at 9.1%, which is a bit lower than last year. This reflects the challenges in maintaining margins amidst cost inflation and investments in core capabilities.
EPS performance and analyst expectations. Now, turning to earnings per share, Ferguson reported an adjusted EPS of $2.45, which is below the analyst forecast of $2.60. John, what are your thoughts on this miss?
It's a slight miss against the expectations set by 6 analysts. The adjusted EPS declined by 7.5% year over year, primarily due to lower operating profits. However, the impact was somewhat cushioned by share repurchases, which reduced the share count.
Does this miss raise any concerns for investors?
While it's not ideal, the company's strong balance sheet and strategic investments suggest they are well positioned to navigate the current market challenges.
Strategic initiatives and market position. Ferguson has been active on the strategic front. Can you tell us more about their recent initiatives?
Certainly. Ferguson completed one acquisition during the quarter and another shortly after. They also repurchased $256 million worth of shares, reflecting their commitment to returning capital to shareholders. Additionally, they declared a 5% increase in their quarterly dividend.
How does their financial position look?
Ferguson maintains a strong balance sheet with a net debt to adjusted EBITDA ratio of 1.2x, indicating solid financial leverage and capacity for future investments.
Future outlook and CEO commentary. Looking ahead, Ferguson has kept their fiscal 2025 guidance unchanged. What does this tell us about their outlook?
Ferguson expects modest revenue growth for the full year, with continued market outperformance. CEO Kevin Murphy expressed confidence in their balanced business mix and ability to leverage scale locally despite ongoing market headwinds.
What are their strategic priorities moving forward?
They plan to invest in scale and capabilities to capitalize on structural tailwinds in the housing and non-residential sectors, particularly in plumbing and HVAC specialties.
Key takeaways. In summary, Ferguson delivered a solid quarter with revenue growth and strategic investments, although they missed EPS expectations. Their strong balance sheet and strategic focus position them well for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Ferguson's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Ferguson's performance in the comments below.